Hi everyone, this is Mayank and welcome back to my channel. So today we'll discuss about this particular company called Sri Jagdabba Polymers Limited. We'll discuss about the company, about the business of it. We'll go to screener and ticker tape to understand the fundamentals and the numbers of it. And then we'll see the trading view, understand the chart, and we'll based on that we'll decide what's the opportunity, what we can have on this stock. So we'll discuss these things briefly in different sections of the video. But before we start on this, there are two humble requests from my side. First, this is not a recommendation, this is just my personal research, and that's the reason I give you the source of research also, so that you can do your own research on the same sources and then you can decide and then you can make the investment, or you can skip this particular company for any investment. Okay, I'm not hiding anything, any source of information also. Second thing is that if you think the videos are helpful for you or anyone in general, please hit the like button, give a comment, share the videos, and if you're not subscribed so far, please hit the subscribe button. This will encourage me to create more and more videos of better qualities and help you become more financially free. Okay, let's jump to the discussion first. You can see the website doesn't look very great. It's not a lot of information is present over here. It's a very old school website. Okay, but if you see what this company does, whatever available on the website, these companies are in different kind of packagings. PP, woven bags, silt fence, I don't know what that is, geotextile, ground cover, lumber cover, box bag, FIVC fabric. But this company is very good in terms of their work. Okay, the website might not reflect what the kind of company this is. So Sidama Polymers Limited is based in Ahmedabad, India, and the company has a stall capacity of 1,000 metric ton per month to process woven polypropylene, so PP, and polyethylene fabrics on both circular as well as soldier looms. More than 80% of the production is exported to US, Europe, and several other countries. Okay. Details of it, you can go to the entire website and read about it, what they do, what they don't. The screener gives also a good overview of the company. Okay, I will first tell you why this is so important right now. So the packaging industry is taking good jumps by leaps and bounds because the economy is moving into more you can say unorganized to organized sector, and when an industry moves from organized to unorganized to organized sectors, even small things comes into good kind of packaging. So when that economy moves in that direction, the demands of packaging starts increasing. First thing, the movement of the economy from unorganized to organized. Second thing is hygiene. So post covid, people have slowly moved into becoming more hygienic. Even rural areas, compared to before, they are focusing more on hygiene. So when they are focusing more on hygiene, the packaging industry also gets a boost. Food packaging industry gets a boost. Pharma packaging industry gets a boost because pharma is getting a boom from last 2 years, and it's going to get continued in the future also, because people are focusing, like people are becoming more so basically, not people, it's the environment is the need of the hour, that we need more and more pharma related stuffs in our life. People suffered from covid are going through their lungs infection, weakness, and for that they are going through medicines, doctors, and everything. So overall, pharma industry is getting a boost, and packaging is a very integral part of indirect beneficiary of the boom in the pharma market. So pharma is one sector, FMCG is one sector, then you see food processing is one sector. So all these sectors has very good demand from packaging industry, and that's the reason companies like Shijadamba Polymer, the other companies also, Jindal, Uflex, so all these companies are also getting good growth in the revenue because of this indirect impact from the industries which I discussed: pharma, foods, FMCG, then consumer durables, all those things, right? So this is what the industry is all about. If you go to screener, if you want to know more about the company, you can click on read more. They extract the information from their annual reports and put it here. So the company's products are, as we told, PP, polypropylene, polyethylene, woven bags, fabric, silk fence, flexible intermediate bulk containers, geotextile, ground covers, etc. Majority of the company's production exported to countries such as UK, USA, and China. So they told 80%, right? So 84% exports, 2% is from India. So previously 11%, now it's 2% in India. 84% compared to 83% in financial 18 is from exports. So they are majorly exports market. This is solely going to grow in India also. You can see their market share reduced by 9%. That's huge. But the overall the packaging industry is going to grow in India also. What are the manufacturing capabilities? So manufacturing wise, they have increased their uh, so the total capacity of 20,500 metric ton per annum of woven fabrics and bags. Okay, they expanded the capacity from 12,000 to 20,500 with an investment of 46 crores, out of which phase 1 has already been started in December 2020 and phase 2 was commissioned in quarter 3 of financial 21. Right, the top 5 customers give the 63% of the revenue, 61% of the revenue. This is what companies does from the product perspective. From the numbers perspective, this company is very decently priced in terms of stock pay ratio. It's not very attractive. It was very attractive when I actually invested in this company. So I'll make a very clear cut number. Yeah, I invested in this company when the price was around 250, somewhere around that in 2020, and I sold the company when price was around 1200, something like that. Okay, now the stock has corrected from there. It went up to 1700, corrected from there, and now I am finding a place where I can again go back and invest in this company. So I made around 500% return in this particular company in my previous investment. Okay, so compared to that, the stock is not that attractive, but still it's attractive enough to invest. ROC and ROE has always been good for this company for last 2 years. Promoter holding is 73.2%, the best promoter holding you can have, and the debt is almost close to the net profit. So net profit is 40.9, debt is 49.6. The almost debt-free company. And then investing expansion, that's the reason free cash flow is going negative because investing all the money. Now, if you see further their growth over a period of year, we will not go to quarterly results, go for yearly results. So every year they have increased their sales. You can see 32, 38, 53, then 122, 147, 179, 190, 96, 239, 348. So every year they have given better sales than previous, and same is reflected in the net profit also. 22, 27, 41, 57. So this company has been doing good in terms of numbers. Stock price CAGR, if you see last 5 years, CAGR was 60%. That's tremendous amount of CAGR this company has done, right? So that's a very good numbers. Balance sheet wise, reserves increased from 7 crores to 162 crores. Why reserves are so important? Reserves are important because that's the kind of money the company have. So whenever they want to expand, whenever they want to add more capacity, these reserves helps them, right? And some company also gives bonus shares. That also happens because of reserves. Since about the topic of reserves, let's see what the face value. So the face value is 1, so you can't expect any split. The only thing we can expect is bonus share if the company increases the reserves to a lot of money where they can't do expansion, right? So that is a very rare scenario, but the importance of reserves is only for that purpose. Okay, so this is very important number to focus on. Sorry for a couple of background noises you might get. Okay, current work in progress, they have nothing, they are not doing anything right now. What expansion they had to do, they already did. Around 60 crore, 46 crore investment what we discussed. So this is overall the company numbers. One important number I'll show you right now is promoter holding. As I told you, 73% with the promoters. With public, you can see is 22.14. But if you expand it more, you'll see 12.69 with Mr. Surendra Kumar only. And Mr. Gautam Chand, Keval Chand, Surana has 1.45. Combinedly, these two people has around 13, around 14, 13.5%. 13.25%, something like that. So around 9% is there only with general public. So it's a very promoter focused company. So around 90% is there with the public itself, like with the promoters itself. So it's very strong hold company. This chart why I opened now is that PE ratio. They told you PE is not very attractive. Their average P is 11 for last, so median P is 11 for last 5 years, but current P is around 15. So in that way, it's not very attractive. But the kind of growth the company is doing for last 2 years, in that way, it's still attractive enough to invest. This is how the PE things happening. So this is the it's about the company. We see the business. We saw the fundamentals. We'll saw one more fundamental reports from this thing, ticker tape. If you go to ticker tape pro thing, the default probability is not there. So this company is governance issue is not there in this company. Financial trend, if you see 2018 they had a profit of 16 crores, around 16.5 crores. In 2018, sorry, in this is 18-19 they have a profit of 21.86 crores. Then same goes for 2020, 27.34 crores. 2021 they have 40.91 crores. So every year they are increasing a profit of around 25%. So that's a good growth. Same goes for revenue also, from 179 to 190, 198 to 46. So they are doing very good from last 3-4 years in terms of revenue and profit. So there is nothing wrong with the company. The company got a very good beating when they got scrapped from point of 1766 to down at around 900 something like that, so it was around 880. So it's a very good point to buy. If you see, this is creating a very good base over here. I'll just draw this line. So from here it's a very good base, so it's around last close to 4 months this company is at this base. So right now also it's available at the same base, close to this. So if you can buy from here based on the company's fundamentals, the business and the overall market scenario, there is there is a very good possibility the stock will again create a new high. So based on that, the previous high was 1762, and if you see the kind of opportunity what we have from the current price to the previous high is around 93%. So that's a very very good opportunity. Even if we don't have that kind of patience, if you don't want to invest for that long, this is a very good resistant point also for this stock, right? So this is what I'll try to. It's a very good resistant point, first resistance. If you want to wait only till first resistance, then this will be our first target, so that is around 40%. So we have two targets here. First resistance is 40%, that's the target. Second target is 93%. So there are two targets you can reach based on your time frame of investment. So this was my analysis, my opinion on this particular stock, Sri Jagdamba Polymers Limited. Please take your decision yourself, understand the basics, understand the fundamentals, know more about the company industry, then only make the investment. And if you think it was helpful, please do like the video and share with your friends and family. Thank you so much for watching. Stay happy, stay safe.